We've just done a video on e-commerce fees, and in general, that comes under credit card fees and fees and fees and fees. So I thought it might be good to touch on credit card fees and bank charge fees in general, because a lot of people seem to get their knickers in a knot over this situation, and I don't think it's as complicated as we need to make it. For me personally, as a business, we're a service-based business. We offer payment in any way possible. If you want to give me cash, I'll take cash. If you want to take check, I'll take check. If you want to take bank transfer, I'll take bank transfer. If you want to take PayPal, I'll take PayPal, Stripe, whatever. We take payment in lots of different ways. Now, different ways for us cost us different amounts. In the UK, there was some legislation passed that you can't pass on them costs to customers. So I can't say because Stripe charged me 1.4%, I'm passing that on to you. And because cash is free, and people always say cash is free, but it's not free. It costs us money to put cash in the bank, and cash is in general a pain in the backside. So people have conceptions about cash being free and bank transfer being cheaper. I don't always think that's the case. In the last video, I talked about conversion rates. Now, for me, what we find is if customers pay quickly and easily, that is a benefit to me. So if I can get a customer on average, let's say, to pay 6 days quicker, that is important to me for my cash flow. And if that costs me, on average, 0.1% in fees to get the money 6 days quicker, you can start to work out, actually, for a lot of businesses, for us, we don't have much lending, but for some businesses that have lots of lending, you will probably save the money in interest by having that money in quicker. So getting the money in quicker, and for me, in order to get the money in quicker, you give your customers options and don't just shove them down a narrow path, then it will help. A big one for me is credit cards over bank transfers for the right sort of money. As a younger business owner, probably under £2,500, £2,000. If you send me an invoice for a one-off bill that's under that sort of figure, probably, in most cases, will pay by card if you make that really easy for me to do. And therefore, you get it straight away, rather than maybe I think, right, I'm not doing bank transfer, I need to set it up on the bank, and it might take me a couple of days. So I just pay it, or it might take me a couple of days. So it is a factor. The other thing with card is for those that are tight on cash and those that are struggling, that are using credit cards or other ways to finance their business and are juggling money around, then by offering the card payment, especially in the early days of Morgan Brandon, when I set up, I was using my credit cards and my personal credit cards a lot. I'd have paid you much quicker if I could put it on a personal credit card than have to use the cash in my bank. So that is a factor depending on who you're working with and who you're working with. Offering payment options is key. Again, bigger clients that we work with, they all want to pay by bank transfer. They all want to pay by PO. None of them pay by direct debit that we have with some of our smaller customers. But yeah, it is worth looking at different payment options and what can you offer. And don't just always look at that cost of the payment option, because sometimes you might collect a debt that you were going to collect if you didn't give that option. So it is a factor. Collecting one more payment that you might have lost through credit card charges will probably pay for 100 other payments charges. So it is worth thinking.